Hey, we're live. Guys, if you're out there and you can listen to us and you can hear us, let us know in the chat and make sure that sound check has worked out for you guys. We're doing a little bit of a pre-show here, trying to get our act together before Elon comes on and bores us half to death. So who we got in the chat here? We got Daniel Dean, and we've got Christian Newman and Bud Rogers. Shouldn't it be Buck Rogers? No, I'm kidding. Let us know in the chat, guys, if you can hear us okay. Hello?
Anyone? Bueller?
No, I'm sure it's
Bueller.
Yeah, no, it's working fine. I just did a sound check on the live stream, so we're all good. Cool. Okay. Well, this is going to be a fun podcast. We're doing something live. We don't do this very often, but we thought we would have our usual guests, Eric and Ian, and our friend Raj joining in. I don't know how long you guys will be able to hang out and stuff, but here we are. So, yeah, we're going to be talking about a whole bunch of stuff. We want to talk about Cybertruck, 4680 cells, possibly Roadster, what's going on in Giga Berlin, Texas, all that fun stuff. A little bit of a pre-show before we get on with the live stream that I'll share out to everybody once it actually begins. Keep in mind, for those of you who are joining in, hopefully it won't be like the last time we did this where the audio level, remember when we did this, the audio level was so low, we had to really crank it. So anyways, I know my controls this time around. Hopefully we'll get it right this time.
Get ready with the booster shot.
Yeah. Well, the thing was is that it was the first time they did a live stream from Giga Texas. So they probably had some technical difficulties and hopefully they got that stuff sorted out. Yeah. So anyways,
I would imagine.
Anyways, let's see here. So the first part of the earnings call typically is Zach Kirkhorn usually coming on and talking about all the financials. So obviously we know that Tesla sold a boatload of cars, and we know that they've made a ton of money. How much? We'll see. But I think it's going to be pretty good. I'm not worried about the financials. Elon has stated that he was going to come on to this earnings call, and he was going to talk about a product roadmap or give us an update on the product roadmap. So we don't know exactly what they're going to tell us. Hopefully it's good news, because there's been a lot of talk, obviously, with the pandemic going on and, been having a lot of shortages with parts and all that fun stuff. Hopefully we don't see too many more delays. What is it, S and X right now? If you want to order one, you're looking at least a year. Is that what it is, Eric, on the website?
I don't know.
What it shows in Canada.
I can check.
Yeah, I've had a few people tell me, it's telling me it's like January or February or something next year. It's like, wow.
I mean, I ordered a Y on December 31st, and it said July, and now it's bumped up between May and June. So it's at least a 5-month wait for some of the cars. I mean, if I wanted a performance car, it would probably show up in March, but...
Yeah, so right now a Model S dual motor all-wheel drive would be delivery of July of this year, and if I go to Plaid, it is 4 to 8 weeks.
Well, that's not too bad.
Really?
Well, plaids are expensive. You can get them a lot faster because they don't sell as many.
Huh. That's the same thing with the Model Y, right? You get the performance much quicker.
Yes, exactly.
Same with 3. All of them, it would seem to follow that pattern.
Yeah,
Let me check the Model X just for fun here. And for those who are listening to us globally, I'm currently based in Florida, but these figures are definitely coming from Tesla here in the US. So Model X dual motor would be delivered. That's January 2023. So that's actually about 6 months later than the Model S. Model X Plaid is October of this year. So it's definitely behind Model S.
Wow, that's just nuts.
Yeah.
Hashtag demand problems.
Yeah,
now,
exactly.
I know that Trevor, you tweeted about this recently about as far as the main nav on Tesla. So Canada can see Cybertruck. Right now I'm seeing no Cybertruck in the main nav.
It's under more,
isn't it? Changes. Well, right now I'm only seeing Model S3 XY solar panels. And that's what we got. There's
tiny
no
little
more
Cybertruck there, Raj. What's he got there?
Cybertruck. That's what I'm most excited about. It's a little Cybertruck.
That's not a Cybertruck.
Oh, wait a second.
Oh, God. Oh, God.
Here we go.
That's a Cybertruck, mate.
There it is.
Okay, so... Yeah, I'll have to get my wife to bring down the Lego one. Have you seen the Lego one? Oh, Raj, I showed you the Lego one.
I got my quad.
Yeah.
You guys have seen the Lego.
The quad is cool. I like that.
Mm-hmm.
Now, Model Y long range is August 2022 estimated delivery, and performance is March.
Oh, wow.
So,
yeah, that's improved a little bit because I remember at one point it was a year. So now it's a little under a year. Not too bad.
Yeah. Well, demand. I mean, that's a good problem for them to have, right? More demand than they have production. It would be worse if you had a bunch of cars sitting on lots you couldn't sell.
Yeah.
Right? Because that's, well, in Tesla's parlance, see, for those of you who might be joining the podcast for the first time or the show, whatever, maybe you're not a Tesla owner. Tesla's not like other companies. Because they sell direct, when the car is delivered, that's when they recognize the revenue. Typically, with every other car manufacturer, as soon as they sell the car from the manufacturer to the dealer, their hands are done. It's considered sold as far as they're concerned, even though it's not typically sold. It doesn't go to the end customer. So that's why they're called resellers. They have to resell it. So metrics are a little different. Listen, here, we got anybody in the chat? You guys want to ask any questions before we get going? I know there was some discussion. There was a rumor floating around that there's a possibility the Cybertruck might be delayed until the first quarter of next year. I don't know how much weight we're going to give to this. Maybe Elon might talk about that in the earnings call today in the product update to see where we stand with that. Listen, they did push it. It was supposed to be, initially they had planned to start Cybertruck production at the end of 2021. If you believe that, I have a bridge to sell you. This is not our first rodeo with Tesla. They're not typically on time. The Model Y was a bit of an outlier. They were about 6 months ahead of where they expected to be on that. But anyways, they have since said that they were going to push the Cybertruck to the end of 2022. And again, there's a rumor floating around that there's a possibility they may have delayed it until early 2023, first quarter. A delay, if you want to call it that, of 3 months. Listen, there was not going to be any appreciable volume on Cybertruck until the first quarter, at least second quarter of 2023 anyways. So as far as I'm concerned, yeah, it's no big deal. If Tesla has decided that they want to maybe delay it a little bit for 1 quarter just to maybe spruce it up a little bit, because there was some talk about possibility of them adding a few extra features now that we have, the Ford Lightning is coming out and the Chevy Silverado EV, both very compelling cars. Tesla's a very quick and nimble company. So if they decided that they want to wait a few more months and just add a few more features to make it even more compelling, hey, it's all good.
I will say that in their, if you go to ir.tesla.com, you can access their stack deck, which will be the presentation they're going to share in just a few moments. And the stack deck does have, it notes this as far as like the future plans, that the Cybertruck would be subsequent to Model Y. Now, we know that the Gigafactory in Texas is very, very close to getting Model Y, at least starting some small batch production. We're hearing updates from there every day. We know there's a lot of images coming out. We're seeing a lot of aerial photography. So we know they're very, very close to getting that up and running. But it may be, to your point, where either they're going to do some site modifications based on the factory as the production runs to see if they need to tweak and fine-tune some things. Could be the vehicle itself, because we oftentimes see that they'll roll out the vehicles in the first few production runs, and then they say, oh, we're going to enhance the vehicle by adding X, Y, Z into the car. So that may delay some things, but it would not surprise me if they want to make sure they get this right out of the gate. I think they want to try to mitigate some of the issues that happened with 3 and Y in their initial stages, and try to make it so that these are successful out the gate as they are, to minimize the chance of having a recall on any of those early production vehicles, and to make sure that if they get that nailed down, they can then turn their attention for Model Y specifically, I should say, but then turn their attention to the Cybertruck down the road. So there's a lot of moving parts here at the same time, but I think there's no rush to move it, to your point, maybe a quarter or so. And if it means basically like having everything ready to turnkey it come January of 2023, then that's okay. Whether the first vehicle is on the ground in December or January is not that major of a deal, especially if you can get production ramped up early next year, then the numbers look better early on than having a little bit of a quantity out there at the end of this year. So we'll see what happens, but we know that timelines always change with Tesla and with any manufacturer, and so we'll see if this holds true for this year.
Yep. So we're about a little less than 5 minutes before the earnings call actually begins. So we got a little bit of music. I'm going to turn this down just a little bit here.
So we got about an hour. That's good.
Yeah, exactly. Elon's never on time for these things, folks. So just be patient here. Yeah, you have to remember with a factory like this, it takes about a year for them to really ramp up production to get to 3,000 or 4,000 cars per week, whatever the number happens to be. I think, hopefully, excuse me, with Berlin and Texas, that they would be able to spool up fairly quickly because they were able to do it in China very, very quickly. China really took a year to get fully ramped up, and now they actually have excess production, so that China, or the Chinese factory now in Shanghai, is actually the primary export hub for all of Tesla now. So
I knew that was going to happen.
Yeah. So if they can spool up Berlin and especially Texas in that amount of time, I think we'll be good. But don't expect to be able to get a car like as soon as they start production, right away. I want to talk a little bit about some differences from what we saw with Austin as well as Texas, because Austin was started 6 months after Giga Berlin, and it looks like production, as far as their ticket is concerned, to actually start production is going to actually happen in Austin before Berlin. Berlin's been mired in all kinds of crap. I think it's probably the better way. Environmental groups putting the wrenches in all kinds of works. So anyways, even though they're 6 months behind Berlin, it looks like they're actually going to start production before. However, there are some differences. Elon's last year had said that they had two plans, a plan A and a plan B as far as the cars were concerned, because the Model Y is obviously their best seller now, and they have two designs of that car. Originally started shipping it with 2170 cells, the same Model 3 battery pack, and they've been putting a lot of innovations into the Model Y, and now they have a structural battery pack, which is actually two parts to this. So the structural battery pack is 4680 cells, as well as a secondary front casting on the car. So all Model Ys have that rear Giga casting. They're going to add one to the front, but that requires the structural battery pack. So going back a little bit, they said they had a plan A and a plan B. Plan A was to get structural battery packs, hence 4680 cells ramped up, and then off they went. Plan B was, if they weren't ready, that they were going to start shipping cars with 2170 cells, the traditional way. Now in Berlin, when they had their open house a few months ago, they actually had several cars on display. Some of them were open and you could actually see, and they actually both had a 2170 equipped Model Y, as well as a 4680 or structural battery pack on the car. Texas, on the other hand, I've been watching very carefully with all the aerial shots and stuff, and bodies that have been shipped to the factory for testing and stuff, as well as the investor stack deck that Tesla has been showing, have shown none of those cars with 2170 cells. And the way you can tell the difference is that the 2170 cells, the body in white has a full floor in it, and the structural battery pack cars don't have a floor in it, because the pack is actually the floor of the car. And it's actually installed from the bottom up with the seats and the center console, all of that stuff. So there's a little less wasted space. So anyways, in the Texas factory ones, not a single car has a floor in it. And that's the dead ringer. That's like the dead giveaway that the car is a structural pack.
That's further backed up by the documents in the deck. If you read page 9, where it talks about the individual locations, it's very telling that it says they've already started, small batch production of Y at Texas location, and then it says in Berlin, the first Ys that come out will have the 2170 pack. So the very fact that they're telling you the early Berlin cars are going to have 2170s, and there's no mention of that at all for Texas, what does that mean?
Yeah.
It's almost certain, based on that and all the observations, that those cars are going to come with the structural pack right from the get-go.
Yeah, and I think it also has to do with supply chain. In Germany, it would be very, very expensive for them to ship. And now I don't know where the 2170 packs are coming from. I'm assuming they're building them in-house with cells imported. I think it would be very expensive for them to... Anyways, the bottom line, I think, is that all of that production at Cato Road in Fremont is going to be sent to Giga Texas, and that's going to be the flywheel for Giga Texas. They're already installing the 4680 battery cell production lines in Texas. They're currently building the battery cell factory at Giga Berlin. It's a separate building, whereas Texas, it's all incorporated in the same building. So anyways, there's some discrepancies going on there, but yeah, I'm a firm believer that the cars coming out of Giga Texas initially, the Model Ys, will be structural battery packs, hence 4160, 4680 cells, with the secondary Giga casting in the front. And hopefully, And of course, I'm for selfish reasons here. I'm hoping that we get all. I'm hoping we get all the other improvements. Like the Ryzen chip is a given. Maybe there's. There was a discussion there going on for some time that possibility of ventilated seats. Not that I care about that. Heated seats more important for me. In Florida might be different, right, Eric?
Yeah, right.
Yeah, exactly. And double paned rear glass. That would be nice, I think, in a lot of ways. Anyways, Model Y is getting a lot of, improvements and stuff and features thrown at it.
A 12-volt battery.
Yes. Well, that's a given, too, because there is a spreadsheet, and we've been tracking it on the forum, of course, where people are taking deliveries, and they're doing a little bit of a check to see what's going on. And it's the trend is definitely Model Ys now arriving with the 12-volt lithium battery system. Now, we call it 12 volt, but it's 16 because there's some other changes going on in the car. But anyways, those cars are actually shipping with the Ryzen processor. That's the trend. Initially, it was Atom, but now that they're switching, there's a little bit more power involved. Anyways, so if you have the lithium battery, 95% chance you have the Ryzen processor as well. Did we lose Eric? We lost Eric. That's okay. Let's just check in on the live stream, and we don't see anything quite yet. Nothing's going on yet, guys.
Nothing.
Okay. We'll check in on a little bit if we see video or we still hear any music. Oh.
There we go.
There's so many people listening to this, we may have some buffering problems. So let's just listen in and see what happens here, folks. We're just going to switch it over.
Of today. Actual events or results
And
could
we will
differ
listen in. We can watch the
due to a
chat
number of risks
stream
and
go by.
uncertainties, including those
I'm going to
mentioned in
refresh
our
the page
most
here, so it
recent
looks like
filings
we're
with the
having some
SEC. During the question and answer
listening
portion
to
of
this.
today's call,
Here we go.
please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue.
Yeah, it's
But
buffering like
before we
crazy.
jump into Q&A, Elon
That's
has some
not gonna be
opening
fun.
remarks.
Here we go.
Thanks, Martin. So
Maybe.
I'm wondering if it's the
2021, it was a breakthrough year for Tesla.
because I'm able to
and for
stream
electric
it
vehicles
in
general.
another window.
And while
My
we
stream
battled,
is not
and everyone
buffering.
did,
Okay.
with supply chain challenges through the year.
So you got some
we
stuff you can
managed to
shut
grow our
down, maybe get more
volume by
bandwidth?
90%
No,
last year.
I'm going to.
This level of growth didn't happen
Okay.
by coincidence. It was a result of ingenuity and hard work across multiple teams throughout the company. Additionally, we reached the highest operating margin in the industry in the last widely reported quarter at over 14% GAAP operating margin.
Maybe what I'll do is I'll.
Lastly, thanks to $5.5
Oh no, it's definitely being streamed on
billion
YouTube.
of
I thought I would
million.
get the audio from Tesla's
Small finger by
typical
the now.
IR one, but it's coming from YouTube.
$5.5 billion of GAAP.
Even if you
Oh.
click on their link?
Yeah,
2021,
it's going
our
straight to YouTube
accumulated
now.
profitability since the inception of the company became positive, which I think makes us a real company at this point. This is a critical milestone for the company. So after an exceptional year, we shift our focus to the future. Texas and Berlin. So we've begun production at both Texas and Berlin. We started that.
Well, this is no
last quarter.
fun.
Yeah.
But that's not the most
Wow.
important thing.
Yeah.
And
we're
you're getting it
focused more
consistent over on
when
your
we
end,
get
Raj.
to volume production.
Okay.
Yeah.
I'm
and
going
when
to.
we
Yeah,
deliver
I just have it
cars
streaming
to
on
customers.
YouTube.
But I think it is worth noting that we and as the internet
Yeah,
has
it's not
observed,
working. Here we go.
we've been making quite a few cars in Texas and Berlin.
Yeah, I'm getting
wanna
some
jump to live?
nasty. I'm getting some very nasty buffering
So-
going on here.
And in Texas, we're building the Model Ys with the structural battery pack and the 4680 cells, and we will start delivering after final certification of the vehicle, which should be fairly soon. Capacity expansion will continue.
Yes, I know.
We're
Maybe what
maximizing
I'll do
output
is
of
I'll
each
try it in a
factory,
different browser here, folks. Just
and
bear with
building
us for a
New
second.
factories and new locations in the future.
Technical
Um,
difficulties.
although we're
Please
not-
stand by.
Ready to announce any new locations on this call, but we will.
At Texas 4680
through
structural
2022
packs
look at
confirmed.
New locations.
Nice.
I'm probably
Yeah.
be able
Nice.
to announce new locations towards the end of this year, I expect. So in 2022, supply chain will
There we go.
continue to be the fundamental
Nice.
vector of output across all factories. So the chip shortage, while better than last year, is still
Yeah,
an
I'm still
issue.
getting some buffering.
And
Even in your other browser?
yeah, so
Yeah,
that's-
this is the
there
problem
are
here. Is
multiple
it's
supply
giving me
chain
some
challenges.
difficulties here.
Last year
Oh,
was
lovely. Technical.
difficult to predict, and hopefully this year will be smooth sailing. That I'm not sure what you do for an encore to 2021, 2020.
Oh,
Nonetheless, we do
lovely.
expect
Thanks, Tesla.
significant growth in 2022 over 2021.
Okay. All right. I'll tell you what I'm going to do. I'm going to restart not the live stream, but just the YouTube thing. I'm just going to close this.
Full self-driving.
I'm going
So
to
over
bring
time,
it up one more
we think
time.
full self-driving will become the most important source of profitability for Tesla.
Hopefully you guys can listen along.
I mean, actually, if you run the numbers on robotaxis, it's kind of nutty. It's nutty good from a financial standpoint. And I think we're completely confident at this point that it will be achieved. My personal guess is that we'll achieve full self-driving this year. With at a safety level significantly greater than a person. So,
You want me to just play it on the mic?
with at a safety level significantly greater than a person. So, the cars in the fleet essentially becoming self-driving by a software update, I think might end up being the biggest increase in asset value of any asset class in history. We shall see. It will also have a profound impact on improving safety and on accelerating the world towards sustainable energy through vastly better asset utilization. Let's see. So on the product roadmap front, there's quite a lot to talk about. I'm not going to go through every sort of thing that we're working on because I think a lot of them deserve product launches of their own, as opposed to a few minutes on an earnings call. So I'll talk kind of at a high level. Mostly at a high level. The fundamental focus of Tesla this year is scaling output. Both last year and this year, if we were to introduce new vehicles, our total vehicle output would decrease. This is a very important point that I think a lot of people do not understand. So last year, we spent a lot of engineering and management resources solving supply chain issues, rewriting code, changing out chips, reducing the number of chips we need. That was chip drama central. And that was not the only supply chain issue. So there was just hundreds of things. And as a result, we were able to grow almost 90% while I believe almost every other manufacturer contracted last year. So that's a good result. But if we had introduced, say, a new car last year, our total vehicle output would have been the same because of the constraints, the chips constraints particularly. So if we'd actually introduced an additional product, that would then require a bunch of attention and resources on that increased complexity of the additional product, resulting in fewer vehicles actually being delivered. And the same is true of this year. So we will not be introducing new vehicle models this year. It would not make any sense because we will still be parts constrained. We will, however, do a lot of engineering and tooling and whatnot to create those vehicles, the Cybertruck, Semi, Roadster, Optimus, and be ready to bring those to production, hopefully next year. That is most likely. But like I said, it is dependent on are we able to produce more cars or fewer cars? in terms of priority of products, I think I think that actually the most important product development we're doing this year is actually the Optimus humanoid robot. This, I think, has the potential to be more significant than the vehicle business over time. If you think about the economy, it is the foundation of the economy is labor. Capital equipment is distilled labor. So what happens if you don't actually have a labor shortage? I'm not sure what an economy even means at that point. That's what Optimus is about. So, very important. Let's see, Drew, do you want to talk about the 4680 program?
Yes, please.
Or is this good right the right time?
Sure.
Yeah. Sure. So throughout 2021, we focused on growing cell supply alongside our in-house 4680 effort to provide us flexibility and insurance as we attempt to grow as fast as possible. As we sit today, cells from suppliers is actually sort of exceeds our other factory limiting constraints that you mentioned, Elon, in 2022. Or to say differently, 4680 cells are not a constraint to our 2022 volume plans based on the information we have. But we are making meaningful progress up the ramp curve in Kato. We're building 4680 structural packs every day, which are being assembled into vehicles in Texas. I was driving one yesterday and the day before. And we believe our first 4680 vehicles will be delivered this quarter. Our focus on the cell, the pack, and the vehicles here is driving yield, quality, and cost to ensure we're ready for larger volumes this year as we ramp and next year. And the 4680 and pack tool installations here at Giga Austin are progressing well, with some areas producing first parts, and the internet has also noticed that.
Yes, it has.
The cell factory here. I'm super pumped. It's like a really exciting accomplishment for us to bring everything into one awesome factory here in Texas.
Absolutely. And just to repeat Drew's point, we still expect to be part or primarily chip limited this year. So that's the thing. That's actually the driver. And that chip limitation should alleviate next year, and then probably we transition into a cell limitation, battery cell. It's total gigawatt hours of cell limitation, which is when the 4680 will become very important.
Agreed.
Thank you very much. And now Zach has some opening remarks as well.
The long opening remark.
Yeah, thanks, Martin. As Elon mentioned, 2021 was a financially transformative year for the company. If we look across the full year 21 and compare that to 2020, our automotive gross margin, excluding credits, rose by over 600 basis points, enabled by work on cost reduction, utilization of our Shanghai factory for exports, and accelerating demand. OPEX as a percentage of revenue reduced despite the impact of one-time items and unique items, and operating income more than tripled, with operating margin reaching our guidance of mid-teens, and these margins are trending up. We also saw regulatory credits accounting for a relatively small portion of our 2021 profitability, which we expect to continue to reduce in materiality going forward. For Q4 specifically, automotive gross margin, excluding credits, increased to 29.2%, which is our highest yet. We do continue to see some impact of higher pricing on certain models and trims, as was the case in prior quarters. But please keep in mind that due to backlogs, changes in pricing will generally impact our financials in future quarters. Supply chain challenges and port congestion resulted in a significant increase in our expedite costs in Q4. We also took reserves associated with warranty and recall costs. Operating expenses were meaningfully impacted by stock-based compensation from the final two tranches of the CEO stock grant becoming probable, and payroll taxes associated with the exercise of the 2012 CEO options. The total impact of these payroll taxes, warranty and recall costs, and excess expedites was just over $700 million in the quarter. Our free cash flows have remained strong, reaching record levels in Q4 of $2.8 billion, despite increased CapEx. In addition to using cash to grow the business as quickly as we can, we have been retiring legacy and high-interest debt. Note that we plan to continue to utilize the ABS market for product-specific financing. As we look forward, we expect 2022 to be another significant and exciting year for the company. We continue to drive for vehicle volume growth at or above 50%, as Elon mentioned, and our plans show that this is actually achievable with just our Fremont and Shanghai factories. For quite some time now, these factories have been running below capacity due to macro challenges with supply and logistics. As Elon mentioned as well, from what we're seeing, the pace of growth in 2022 will again be determined by supply chain and logistics, which is quite difficult for us to forecast. Despite these constraints, it's important to begin the ramp of Austin and Berlin to ensure that we are prepared once limitations ease, enabling us to increase total output more quickly in the future. This will result in higher fixed and semi-variable costs in the near term, in addition to the usual inefficiencies as we ramp a new factory. We are also seeing inflation and rising commodity prices, which we expect to continue to put pressure on our costs. How this specifically impacts gross margins in the near term is uncertain, given a mix of both tailwinds and headwinds. However, we do expect to continue to see stronger operating margins as we grow our volumes and improve operating leverage. Over a longer-term horizon, we are quite optimistic about the expansion of margins, though. From the hardware side, we are aggressively driving manufacturing innovations and operational efficiency to reduce cost. And with the rapid development of FSD, software-based profits will ultimately become a strong addition to the profits generated by selling hardware. So congratulations to the Tesla team for a terrific 2021, and thank you to our suppliers who supported us. Looking forward to another great year.
I'd like to just second the thank you to suppliers. A lot of suppliers work very late nights, weekends, vacations around the world, and we're very grateful for that.
Thank you very much. Let's go to the Q&A from the investor side. The first question was on 4680 cells, which we already answered. So let's go to the second question. How is the progress of the $25,000 compact car? Can you give an update?
Good idea. Good question.
Well, we're not currently working on the $25,000
What?
car. We, at some point we will, but
Oh my God.
we have enough on our plate right now. Too much on our plate, frankly. So
Wow.
yeah, at some point there will be. But I think that's sort of a question that it's sort of the wrong question. Really, it's the thing that overwhelmingly matters is when is the car autonomous?
No.
At the point at which is autonomous, the cost of transport drops by, I don't know, a factor of 4 or 5.
Oh.
Thank you. The next question from investors is, since we're talking product roadmaps today, how do you view domestic cooling and heating in the context of accelerating the sustainable energy transition? And how might Tesla's HVAC and heat pump advances fit it?
You want to talk about that, Drew?
I think from a mission perspective, it's very aligned. If you imagine replacing natural gas, water, and space heaters with electric heat pumps, it offsets something equivalent to like 80% of what a solar plus Powerwall system would offset. So it's very impactful. And we have learned a lot about how to make capable and reliable heat pumps that work in all environmental conditions, and are excited about the idea of working on that problem one day. We put it that way. It's definitely aligned with our mission to accelerate the transition to sustainable energy.
Yeah, I think it really becomes quite a compelling solution to the consumer, where you integrate the electric vehicles, charging, solar, energy storage, hot water, HVAC, in a very tight, compact package that also looks good. It just doesn't exist. Yeah, I mean, The integration of those systems in a house.
That's Lars, by the way.
Sorry. The integration of those systems in a house are no different than the integration of those systems in a vehicle.
Yeah.
The only difference is we do it all in a vehicle.
It's way harder in a vehicle.
And then
it's so constrained on mass and volume and energy. It's like you get to the house, you're like, wow. If you have
kind of easy problem.
Yeah.
But
Makes sense.
Obviously those systems are all just disparate, and what we've been doing with Powerwall and charging solar is integrating them more and more. The next logical step is obviously HVAC and water and heating. So we will do that, and we will integrate it probably better than anyone has. But as you said, we have a lot of stuff on our plate.
Yeah.
So.
And obviously it integrates with your phone and phone app and everything, and then the car can, the house can just heat and cool things because it knows you're coming home. Type of thing. It just doesn't need to be like randomly that temperature when you're not there, or
when the cat moves.
Yeah,
It's an excellent business for them to get in.
So
Makes sense.
Yeah. Do sensible things and just work really well. I think it'd be just quite a game changer down the road. We got a lot of fish frying on it, and so it is a thing we will do, but we're not committing to a time frame at this point.
And people should do it anyway.
Yeah, if somebody else wants to do it, yes, please.
Yeah, it's super beneficial for achieving the goal here.
Yeah.
Thank you. The next question is, would you consider splitting FSD packages into perpetual and term licenses?
Thank you.
With a higher tier for both options for commercial use. A perpetual license could be attached to individual or business and not the vehicle itself.
Here we go. Elon's going to shoot it down.
No, I mean, it sounds maybe too complicated. We're just going to be focused on what solves for the fully considered lowest cost per mile or kilometer of driving, and these other so that's what matters. Like how do we maximize the efficiency of getting people from one place to another, and then charge them in a sensible way,
including the charging infrastructure. That's a big part of it.
Yeah, exactly. Charging for money and charging for energy. Yeah.
That sounds more complicated than doing what we asked them to do.
Thank you. The next question is Dojo on track for summer 2022? And what challenges, if any, are you working through? Is Dojo necessary for FSD to operate better in cities like New York City? Or on a separate note, where should we expect the first implementation of Tesla bots? In your factories?
Okay, there's a few questions in there.
Big 6 questions.
Yeah, Dojo appears to be on track for doing something useful in the summer of this year. I think the threshold that really matters is at which point, when does it become more competitive than a GPU cluster for training? And obviously the GPU cluster is getting better, so it's a moving target. But that's the goal I've set for the team is the FSD team running our GPU supercluster needs to tell me that they want to use Dojo instead. That's a obvious sort of threshold. I don't know when that will. It's I wouldn't say success is 100% certain here. I think you would just generally want to overestimate heating options and underestimate ourselves. But it does seem as though we might pass that threshold next year with Dojo if we execute well. Dojo is not needed for full self-driving, but it is a cost optimization on training vast amounts of video data. Cost optimization also a rate of improvement. So if you can train models faster and have a shorter iteration interval, then you can make progress faster. So, not everything can be just distributed to a zillion deep GPUs. So there's some element of serialization there. So,
And then, if Dojo is competitive, then, it does seem like the kind of thing where we would offer it to other companies that want to do neural net training. This is very much a neural net training optimized system. But in theory, it should be better than a generalized computing platform, or say GPUs, which were not really intended for, the pixel shaders, not directly intended for optimizing training of neural networks. They just happen to work better than CPUs in most cases. So you can think of like Dojo as like a giant ASIC, optimized for neural net training, especially video, or video-like things. But as like I said, we're not saying for sure Dojo will succeed. We think it will. We would encourage those who think this is an interesting problem to join Tesla. So.
Thank you. And the first use of Tesla Bot, whether it's in the factory or elsewhere?
Yeah, the first use of the Tesla Bot, Optimus. The Optimus name seems to be sticking, at least internally. Optimus Subprime.
I didn't even know what that was until just now.
Yeah, like if we can't find a use for it, then we shouldn't expect that others would. So, the first use of the Tesla Optimus robot would be at Tesla, and are like moving parts around the factory or something like that.
Okay, thank you very much. And the next question on insurance. When do you plan on having your insurance service rolled out in all the states? International rollout timing in markets that have Tesla insurance, what kind of uptake rates are you seeing?
Yeah, we currently offer Tesla insurance in 5 states in the U.S. 4 of them are telematics, which is Texas, Illinois, Ohio, and Arizona. And then California, which has a more standard insurance offering based upon regulations there.
It should be clear, like we're pushing very hard for California to change the rules to allow informatics, which basically means that you're as safe as your driving is measured. So I think the current California rules are contrary to the best interests of the consumers in California, and should be changed.
Of course.
Yeah, and that's evidenced by what we're seeing in Texas, where we've been in this market now for about 3 months. And what we see in the data is the frequency of collision by folks who are given a feedback loop on how they are driving is quite a bit lower than the frequency of collision otherwise.
Yeah, we give people direct feedback on whether driving is safe. And if they drive safer, their insurance costs less, so they drive safer. It's great. It's
pretty good incentive.
Tesla insurance with informatics and real-time feedback encourages safer driving and rewards it. I mean, monetarily, it's great.
Exactly.
Yeah.
And so we see that so far in Texas. Take rates have been quite strong. We measure this on the conversion rate from when folks quote to see what their monthly rate would be at the starting point to what percentage of them purchase. So we're very encouraged by the interest that we're seeing in Texas. And then we've had enough history in Texas to see what does the loss ratios look like and how do the economics of the program work. And, we're on the right track there as well. So we're comfortable with what we've seen in Texas to move as quickly as we can to scale this across the U.S. Specifically on the question about when we will be in all states, this is a slow process because of insurance being regulated at the state level. And so we have to go through each of those processes with each of the departments of insurance at each state. But our internal goal here by the end of the year is to be in enough locations that 80% of our customers within the U.S. Could choose to sign up for Tesla insurance if they wanted to. There's a lot of uncertainty around that based upon the regulatory processes, but that's our goal. And then as we make more progress rolling out in the states and each incremental state becomes a little bit less effort than the prior, that's when we'll turn our attention to the Europe market. We might be able to do that by the end of the year, starting to get work on Europe by the end of the year. We'll have to see how we progress in the U.S.
Raj had to jump out, so it'll just be Ian and I from now on.
The next question is, what is your expected max capacity from each of your current factories, Fremont, Shanghai, Berlin, and Austin, and timing for new factory announcements?
I don't think we want to comment on that. That's. It's always possible to increase the output of any given factory. So you say, well, what's the max capacity? Well, it's difficult to say what that max capacity is because you put a lot of effort into it. You increase capacity quite a lot. I think looking at the big picture, you don't necessarily always want to increase capacity at one factory because your logistics costs of transporting cars needs to be considered, especially as the cars become more affordable. You want to have factories that are not like thousands of miles away from the customers. So even if you could increase output, it may not actually be the smart thing to do. So in the U.S., for example, with Giga Texas, coming up, we would want to deliver, say, Model Ys that are going to the eastern 2/3 of the United States from this factory. The logistics costs are going to be much less. We will continue to increase output in Fremont and at Giga Nevada and in Shanghai and as I said at the beginning of the call, this 2022 is the year we will be looking at factory locations to see what makes the most sense, possibly with some announcement by the end of this year. Yeah.
Thank you. And the next question is, what are the biggest obstacles for Cybertruck volume production besides battery shortage?
Batteries will probably not be the limiting factor in Cybertruck production. There's a lot of new technology in the Cybertruck that will take some time to work through. And then there's a question of what's the average cost of a Cybertruck and to what degree is that affordable? You can make something infinitely desirable, but if it's not affordable, that will constrain people's ability to buy it because they simply don't have the money. I'd worry more about how do we make the Cybertruck affordable, despite having awesome technology. That's the thing that will really set the rate. Aspirationally, we'd like it to, in terms of just a rough order of magnitude, we'd like Cybertruck to be at least on the order of 250,000 vehicles a year. But it'll take us a moment to get to that level.
Thank you. The next question is, how much of Tesla's margin improvement is from number one, economies of scale, number two, production line design efficiencies, number three, reduced transportation costs from multiple plant locations, and number four, pricing versus cost inflation, or number five, other sources? And how much further could margins improve and why?
There's basically four major factors if we look over the last year to the margin improvement in the company. And they're in no particular order here, but these are the big ones. So our mix of Model Y is increasing as we've ramped that to higher capacity in Fremont and also in Shanghai. And the reason that matters is the Model Y is a vehicle that carries a higher profit than the Model 3. And so that is helpful on our margins. And then as we increase the volume on that program with labor efficiencies, fixed cost amortization, they improve and the costs go down as well. The second one here is localization in Shanghai has been a huge help for margins for the company. And, the obvious things around logistics and duties is a big part of it, but we've also, that factory had a different line design, more efficient from the start. and we've been pushing the boundaries on the volume there. So that has been helpful. If you recall, at the beginning of the year, we also were in a transition to the new version of the Model S and Model X. And so as that has ramped over the course of the year, that has been helpful. And then we've also done various price increases in certain markets on certain models, which has helped there. So that's generally the story at a high level. As we look over the next quarter or two, as I mentioned in my opening remarks in the last call as well, we have rampant efficiencies from the launch of Austin and Berlin. We also have pressures coming from inflation, supply chain, raw materials, et cetera. And so, where that nets out is hard to say in the immediate term. And we obviously, as a company, are going to be driving to increase margins as much as we can. But I just want to be realistic that we're launching 2 factories simultaneously here, and it unavoidably will add cost to the business as we do that. And as we look further out, and Elon mentioned this in his opening remarks as well, the software portion of the business, I think, is the one to really pay attention to. As full self-driving features get rolled out to more and more folks. I mean, for me personally, I prefer to drive my car with the FSD Beta on. I think as more and more people experience that, take rates there, and then as we work towards the robotaxi space, there's actually quite a bit of upside on margins from a software perspective.
Yeah, I think basically everything pales in comparison to the value of a robotaxi or self-driving. Everything, I mean, that just tends to overwhelm everything. You just go from having an asset that has a utility of perhaps 12 hours a week for a passenger car to maybe around 50 or 60 hours a week. So a 5x increase in the utility of the asset. The cost didn't change. So that's where just things just it's kind of blows your mind.
Thank you. And the last question from investors is, Elon mentioned level 4 autonomy could be achieved this year. Is it based off initial FSD Beta rollout experience, or is level 4 ability predicated on Dojo being complete and online?
As mentioned earlier, Dojo is not required for full self-driving. It should have a positive effect on the cost of training networks. It's not just a question like does you get to full self-driving, but really it's kind of like the march of nines of reliability. Is it 99.999% reliable or 99.999999%? This gets nutty. So we obviously want to get to as close to perfection as possible. Frankly, being safer than a human is a low standard, not a high standard. People are very, very lossy, often distracted, tired, texting. Anyway, it's remarkable that we don't have more accidents. So so actually being better than human, I think is relatively straightforward, frankly. How do you be 1,000% better or 10,000% better? That's what that's much harder. But I think anyone who's been in the FSD Beta program, I mean, if they were just to plot the progress of the beta in interventions per mile, it's obviously trending to, a very small number of interventions per mile. And the pace of improvement is fast. And there are several profound improvements to the FSD stack that are coming, the next few months. So I would be shocked if we do not achieve full self-driving safer than a human this year. I would be shocked.
Thank you. Let's go to analyst questions now. And the first question comes from Jed from Canaccord. Jed, feel free to unmute yourself and ask a question.
Hi, thanks. And congratulations on a great year. Elon, I guess my question's around the Megapack or your energy business. And so as we look at the strategy or the supply chain constraints that you mentioned, you have two different strategies where it seems like with Megapack and Powerwall. And I think the Powerwall was answered with 4680 and the 2170 opening up. So I was wondering if you could just talk about the supply chain and LFP for the Megapack and what we should expect for that.
Yeah, to be clear, we do think that all stationary storage, Powerwall and Megapack, will transition to an iron-based system, basically a non-nickel system. Manganese is also, could be part of the future, but primarily iron. It just comes down to iron, nickel. You need something that is formed in a star before a supernova, ideally. So, iron is. So there's a ridiculous amount of iron on Earth, as well as a ridiculous amount of lithium. So, so you can really expect all stationary storage to transition to iron over time, and like I said, with manganese is like a wild card. It's also less manganese. And I should say, like we did shortchange the energy business last year, in that vehicle took priority over the energy side. So
not on cells, but on chips.
On chips, exactly. Yeah. We do see a very, long-term, probably terawatt-hour per year energy business. Yes. So a lot. It's very vast. Yeah.
That's helpful. Thank you. So you see that 22 is kind of the opening of that the energy business reaccelerating.
It's hard to predict 2022 because we still have lingering supply chain. There are still lingering supply chain issues globally. But I think the chip stuff, at least the chip side of things, appears to looks like it will alleviate end of this year or 23. I mean, there are a crazy number of chip fabs being built, which is great. The sheer number of chip fabs being built right now is exciting to see. Yeah. So, but there could be other issues. We're trying to anticipate those as much as possible, but predicting the future is difficult.
And the goal is definitely to grow it this year.
Yeah. It'll grow this year, for sure. It just if we're simply we're able to respond to demand, it might grow by like 200 or 300% or something, as opposed to 50% or something.
Yeah. I mean, I think it's exactly that. I mean, it's a question of does it double, triple, quadruple? I mean, either way, I think our plans are pretty ambitious for Megapack this year, and storage in general.
Yeah.
The exact amount of growth is hard to know. But ultimately, I mean, to Elon's point about the growth of this business, I mean, we need to be growing it faster than the vehicle business.
It will actually grow faster than the vehicle business once we can alleviate the damn chip constraint, frankly. So it will grow like kelp on steroids, basically, down the road. It needs to. primary mission is to accelerate sustainable energy. That's always been our primary mission, and we're trying to stay true to that.
Thank you. The next question comes from Ben Kalo from Baird.
Hi, thanks for taking my question. I was wondering on the R&D front, because like you said, you have so many fish frying. How do you organize the R&D, efforts, so that you can, start talking about all these new products? Is there like an incubator or some type of thing like that? But just structurally, I'm curious about that. Thank you.
We don't have incubators.
Or research centers.
We don't have research centers.
No.
We're in it.
Yeah.
We work on things that go into our products.
Yeah, we're like, this is a useful product that the world really needs, and we're just like, let's make this thing, design it up and iterate fast and then figure out how to make this at scale at a reasonable price. That last part is the super hard part. Many times I've said prototypes are easy, production is hard. If we could whip out a zillion prototypes, but what's the point of that? You actually reach scale production and have cash in exceed cash out. That's the super hard part. So
everybody needs to be in the factory often enough to be able to understand that last part of the equation.
Yeah.
And if you're in a research center,
yeah, I mean, doing them separately is like innovation for actually making products. So we don't think of it as R&D and then like the product development. It's just one fucking go. Sorry. One go to just make great products.
There's just in general, societally, there's way too much value placed on the idea. It's like, like the idea. Everyone can have the idea of going to the moon. That's not the hard part. Okay, going to the moon is the hard part by far. And the thing is that is true for really most products. So there's just way too much value placed in the idea of versus execution. We have ideas. We have a bazillion ideas. More ideas than we know what to do with. We have to sort through them and say which one are we actually going to go through the blood, sweat, and tears of bringing to volume production. That's the super, and then do that. That's tough. So.
And the closer you are to applying blood, sweat, and tears to actual production, the faster you'll be able to bring new things into actual production.
Yeah, exactly. So. You want a tight feedback loop with production.
Yeah.
That's like the office we're sitting in right now literally looks over the Giga Texas production line. Like the offices are integrated into the factory.
Thank you.
Thank you very much. The next question comes from Tony Sacconaghi from Bernstein.
Yes, thank you for taking my question. I have two, please. First, you spoke a lot about FSD and how the economics could be very attractive going forward. I'm wondering if you could just share what your current attach rate might be for FSD on your vehicles, or how to think about the progress of your attach rate or revenue in FSD, let's say in 21 versus 20, and how much deferred revenue for FSD was drawn down during the year. And I have a follow-up, please. Thank you.
I think the FSD stuff, you really don't want to be looking in the rearview mirror. It will not be a good indicator for the future. This is where you need to look out the front windscreen. Because it is such a profound step change.
That's a very interesting way of sidestepping that question.
Long term, every car will have FSD. So, and the value of that will be a very big number. It's like you just look at this as asset utilization, and you have a passenger car, which normally is driven maybe 1.5 hours a day on average, maybe 10 hours, 12 hours a week. A lot of cars in parking lots. So we're spending money not just driving the cars, but storing them all over the place. We can get rid of a lot of parking lots if you have a car that is operating all the time. There will be a challenge with traffic. So, we got like this little tiny baby company, the Boring Company, which I initially started as a joke, and now, but now I think it actually could be quite essential to alleviating the insane traffic that will happen when cars are autonomous, because you reduce the pain of travel and you reduce the cost of travel so dramatically that there will be a crazy number of cars on the road. I mean, it's going to be, I think it's going to be cheaper to go point to point with a robotaxi, which is an autonomous Tesla, which every car we've made in the past 3 or 4 years will be capable of that, than a bus or a subway. It'll cost less than the subsidized value of a bus ticket. So people are not going to take the bus. If it costs you, I don't know, for argument's sake, $2 to travel 10 miles point to point, nobody's taking the bus, especially in cold weather or it's dark or maybe a little bit dangerous or the hell with that, door to door. People just do not understand how profound a change this is. It's not like some little feature. It's like the most profound software upgrade maybe in history. Millions of cars suddenly have 4 or 5 times the utility than they used to have overnight. I don't actually know how to quantify that financially, except that it's some big number.
Okay, thank you for that. Elon, I was wondering if I could just follow up and ask you, you talked about your product roadmap and also your goal to keep growing at 50% per year or better. That would put you at 3.2 million vehicles or more in 2024. And I think you made reference to Cybertruck, maybe being 250,000 vehicles. If there is no $25,000 vehicle being worked on, is it really realistic to think that you can sell more than 3 million vehicles with 2 very high volume cars and Cybertruck in 2024? Or how do we think about that, or what else is missing in that equation?
Yeah, I mean, it is apparent from the questions that the gravity of full self-driving is not fully appreciated. If an asset has 5 times more utilization than it's like dividing the cost of that asset by 5. So if you have a $50,000 car, it's like having a $10,000 car all of a sudden. But maybe better than that, because still you don't need anyone to drive. So the person can be engaged in productivity or amusement instead of having to, onerously drive through traffic. So it's probably better than 5 times. I don't know. Basically, if the cost of our cars did not change at all, we would still sell as many as we could possibly make.
Thank you. And the next question comes from Pierre Ferragu from New Street Research.
Hey, thank you for taking my question. Can you hear me well?
Yeah.
I wanted to come back on batteries. So it's great to hear on one hand that you guys expect to sell like the first cars with 4680 this quarter, and at the same time that you don't really depend on that ramp to achieve your what you hope to achieve in terms of significant volume growth this year. And the question I had is, I understand well the ramp at 4680 internally, but I'd be curious to hear you talk about how you think about 4680 as being a form factor that your suppliers could adopt as well, and how you see in the long run, in the greater scheme of things, what does 4680 become? Is it going to be outside of Tesla the largest form factor for batteries? Is it something that you guys are going to deploy in all cars, whatever the chemistry, also in the Megapack, in all your energy storage business? And do you expect eventually a lot of other companies to use that form factor as well?
Yeah, on the 4680 as a form factor, yes, we've engaged with a number of our partners, our suppliers on the form factor, and they're all working on it. And they look at it the way we look at it, as a way to drive fundamental cost efficiencies in production, and also ultimately the design of the cell itself to drive the cost down of the cell. And so that's what's engaged. I mean, we're engaged because we think it's a good form factor. They're engaged because they think it's a good form factor, and we want people to make it for sure. To the question about should everything be 4680, it doesn't have to be. In the end, it's about cost competitiveness, scalability of manufacturing. And when you compare like a iron cell with a nickel cell, for example, like there are some just physics-based differences in what happens in certain corner cases that would drive different form factors, and we just have to be cognizant of that and design to that. So it isn't like the ultimate form factor for all things. There's other form factors that could be better for an iron cell, for example. So
yeah, we don't use 4680 at all for the iron set-based cells.
No.
Okay, thanks. And I have a quick follow-up on chips. So you've talked a lot about all this shortage and these supply difficulties. And I was wondering if you could give us some color on, like the power chips you need for inverters and all the power systems you're putting together versus like the more traditional logic chips, if the situation is different between the two. And should we understand from the situation today that you're working very hard also at expanding the scope of your suppliers, and should we expect like Tesla to take on board additional suppliers in the near term, especially on the power side?
Last year was chip hell of many chips. So silicon carbide inverters were certainly one of them, but
honestly, there's a lot of annoying, very boring parts.
Yeah. It's a ton of very simple control chips that run of the mill, literally, yeah, basic chips to control
voltage references, oscillators, just like very boring things.
Yeah, exactly. Like the little chip that allows you to move your seat back and forth. It actually was a big problem.
Yeah,
couldn't make seats. So I like, but a lot of these things are alleviating. I think there's some degree of the toilet paper problem as well, where there was a toilet paper shortage during COVID, and like obviously it wasn't really suddenly a tremendous enhanced need for ass wiping. It's just people panicked and ordered and got every paper product you could possibly wipe your ass with, basically. And I wasn't sure, is this like a real thing or not? I actually took my kids to the H-E-B and Walmart in Texas to just confirm that this was real. Indeed, it was. And there was plenty of food and everything else, but just nothing, no paper products that didn't cause a splinter. So an odd choice for people to panic about. Mm-hmm. If there's things if the end of the world's coming, I think toilet paper is the least of your problems. So I think we saw just a lot of companies overorder chips and they buffer the chips. And so we should see, and we are seeing alleviation in almost every area, but the output of the vehicle goes with the least lucky whatever the most problematic item in the entire car is, and there's like at least 10,000 unique parts in the car. So, way more than that if you go further up the supply chain. And so it's just which one is going to be the least lucky one this time? It's hard to say.
Yeah. I mean, on a go-forward basis, right, the idea is to continue to drive simplification. So there are fewer unique parts, fewer of them. On the power side in particular, it's still like an area of like technological development where, the next chip can do the same thing with less die area. So like the total fab required to accomplish the function goes down. So there's still room to grow without needing more fab capacity. But in general, there's a lot more fab capacity coming. So that's like a win-win there.
Yeah. Yeah. It's just not a long-term thing because there's going to be there's a crazy amount of chip fabs being built, which is great.
Well, thank you very much. Unfortunately, that is all the time we have for this session. Thanks very much for all your good questions, and we'll speak to you again in 3 months' time. Have a good day. Bye-bye.
Thanks.
All right. Well, that brings the end of the... Turn that down. There we go. That brings the end of the live stream on Tesla's part. I think you guys want to spend just a few minutes and just kind of talk about some of the things they said in here, because there's quite a bit to unpack. I mean, I don't think we want to spend another hour talking about all this stuff. Maybe there's about 4 or 5 points that we can probably discuss. I don't know where to start. Let's, obviously the $25,000 car looks like it's not a priority. It's basically abandoned at this point. Kind of ties in with what Elon's talking about with FSD. For some reason, he seems to think that FSD is the way to go because people don't want to be driving cars anymore. And I have a tough time reconciling that with them trying to sell cars at the same time, and then you know what I mean, and they don't want to work on a cheaper car now. So like, what point? I don't know. I don't get it. It's...
My overall feeling on this is really two things. One is, I feel like there are times where Tesla wants to bite off more than it can chew and being very aggressive because they want to grow very rapidly. And again, the mission statement for the company, I think, is the underlying driver of that initiative. But at the same time, like, you're a tech company, so what is your focal point going to be? And I think they put so many toes into so many waters that it took the pandemic and the supply chain issues to really bring all of that to a head and say, okay, we now have to really shift what we're doing and determine what is our main focus in terms of all of these projects. What is the main takeaway? And I understand trying to say, all right, we need to just hone in on the things we've been doing. Like, why did they build all these gigafactories? They built the gigafactories because they wanted to increase production of these cars. Because Fremont, by and large, by itself, was not going to do it. So you build these factories, and it's batteries, it's tech, it's all kinds of stuff. But it's realizing it's just easier to have more factories around the world so you can actually do all the stuff simultaneously and just bring out more cars. But if 3 and Y are right now the main drivers of your revenue, because S and X had their refreshes and that's still kind of ramping up, then it makes sense to me to say, okay, we're just going to focus on that. Right now, we know that's where the money is. That's where our initial or our primary source of income is coming from. We're just going to keep focusing on that. And understanding that Cybertruck was always going to be an Austin vehicle. We always knew that. And so if you're saying that we need to ramp up Y production first, but what's hindering our progress from doing so is supply chain issues, among other factors, right? Certification and everything else. But if supply chain's the main driver hindering production, then it makes sense to go, well, we have to push everything else to later. And if it means no R&D for a $25,000 car, then I understand that. It's a detriment to those who are waiting for that. But I always felt like the longer these primary 4 vehicles are in production, and we knew Roadster is going to be eventually coming, like, there's so many things they've already said, we're going to build this. All these things now are hindering all of those projects, every one of them. And because of that, it makes sense to say, yeah, you know what, we're going to have to shelf that for a while. We want to do it. Maybe we'll readdress it another time. But right now we can't do it. And it's the way things are right now. I mean, if Ford 6 months from now says Lightning's on a delay, No one's going to be like, well, that's stupid. No, it's understandable. Everything is affected by COVID. And, it's just, we're not out of the woods even for now with Omicron. And so who knows if there's going to be another variant down the line that could cause yet another series of delays. So it's a lot to unpack, and I'm glad we're having the dialogue, and I'm glad Elon's being forthcoming about it. But it also shouldn't drive the stock down to like massive drops because it was never guaranteed to begin with.
Yeah, but Wall Street doesn't work on logic like we do.
I know.
But anyways,
Yeah.
I think it's disappointing that they've decided to put the $25,000 car on the back burner. Let's talk about the supply chain situation, because obviously last year was bad for them. It looks like it's not really going to get any much better this year. Obviously, that has a lot of play into their product. So for those of you who were anticipating a new product reveal or anything like this year, I never anticipated anything for 2022. I always expected that they're going to double down on Model Y and really focus on getting Cybertruck engineering and production lines set up and ready to go for that. And interestingly, no talk at this point of Roadster, where we stand on that, although my personal opinion, that's at least a late 2023 or 2024 car. So that's where the focus is right now. Giga Texas is going to start producing Model Ys, obviously, and we're doing a little bit of a recap for those of you who might be coming in a little bit later or in the chat and didn't hear the first part of the call. So definitely confirm Model Y out of Giga Texas starts producing this quarter. They definitely have 4680 battery cells, structural packs. So yay, finally confirmed. We suspected that now for several different months. So it's boding well for those of you who are looking for getting a car towards mid-year. I think it kind of had a little bit of play on some of the delivery dates that have been anticipated. Now, I don't know how to reconcile that with what's production's going on in Fremont, because in Fremont they're doing 2170 cells, and I know a lot of people have been asking, and I've got lots of questions on DMs and on the forum. How does Tesla, because they've heard all of the things from Battery Day. Oh, the 4680 cell is supposed to be charging faster, and it's supposed to go further, and it's supposed to cost less, and and then now you're still selling a Model Y with 2170 packs. So how are they going to sell the cars? How are they going to differentiate? Are they going to tell you that this and that? So it remains to be seen. Although my personal opinion is that I think what's going to happen, at least initially with those cars, is that they're not going to tell you. At the end of the day, what really matters is that the car does the same thing as you always anticipated, right. And they might limit the size of the battery pack so you get the same range initially. Right, they are supply constrained to a certain degree with these battery cells. So don't.
He didn't actually say that was the problem. It seems that like they're swimming in batteries compared to everything else. Was the gist of the
Yeah,
call.
I know, but the thing is that you don't want to Osborne your product. If you got a lot of people that have been placing orders for Model Y, they're waiting, and then all of a sudden, oh, we got this new one coming out of Texas, and it has this new battery thing. Oh, I'm going to cancel my order. How many people are going to cancel the order when they get a VIN and look at the VIN and says, oh, it says Fremont. I don't want that one. I want the one out of Texas.
That's going to be a big problem.
There's some logistical problems for these guys that they have to sort out.
Well, and I also, this goes back to something that you've mentioned before, which is your hope that you get the Austin build for your Model Y. And I feel like, and we talked, for those who
and
are
I'm
not
not the only one. There are other people that feel the same way.
We mentioned at the very beginning when we first went live, I sort of went through here in the US what the expected delivery times are for the primary vehicles for X, S3, and Y. And, we've seen the numbers drop a little bit, which is very handy for those who are waiting for the vehicles. But at the same time, it's like, we know there are people who go, well, I don't want a performance build. I want a dual motor, or maybe even for the Model 3, for example, the single motor. And the wait times for those are much, much longer. They're really further out than what we're seeing now for some of the faster vehicles. And that's in part because they realize we need to make the vehicles that generate the most revenue. So from a business perspective, that makes sense. But then you get into now the added factor of, well, there are going to be owners who go, well, I'm not sure I want to wait, but I also know I don't want X build. And my thing is, to your point, when there is technology involved, and they can sort of refine the vehicle's performance remotely through software updates, the battery pack being the battery pack, I'm someone who's like a Model 3. Listen, I'm a 2018 Model 3 owner. There was a time where I waited damn near 3 years to get my car. right? So there's going to be a point for some owners. I know this is not across the board, but there'll be some owners who are going to say, you know what, I'm indifferent. It doesn't matter. I've waited X number of months or weeks or whatever it is. I want to get my car now. And if it's from Fremont, fine. If it's from, Berlin, fine. Like wherever it comes from, it's going to come from. But I think in general, I think the number of people who have that mindset, which is I'm very particular about which one I get because of whatever it is, battery pack or anything else, I think that's a small number of people.
Yeah,
it's a problem, but I think in terms of the overall scope, because they say, listen, we know we can sell more cars than we can make. That's a reflection of people just want the car regardless of where it comes
You're
from.
absolutely right with that, because you have to understand, I mean, we're so involved with Tesla. We've been following for years. We know what's going on. We listen to the tech, all these podcasts and stuff. But the average consumer, and it's probably on the number, I'm just going to throw a number out there. Maybe it's 90% of the consumers don't know jack anything about what battery pack and what cells. I mean, I get this all the time. So for us that are like super involved, it's an issue for us. But the average consumer probably doesn't really matter. However, again, how is Tesla going to position this, right? And I'll say it right now. It's not like you can go to the Model 3, the Model Y, the S or the X website, and you will not see any reference on any one of those pages as to what cell they put in that car. We happen to know what they put in the cars, but they don't spell it out on the website. So again, if this magical 4680 cell is better and it's faster and it whatever, maybe they'll just rev the website in such a way and says, oh, automatically the cars get X amount of range. Or maybe they won't mention it. Maybe they'll sandbag it. Maybe they'll software limit it. We don't know at this point. So for those of you who are worried about it, it's like, well, remains to be seen. For the average consumer, I personally expect Tesla to not spell out anything about that and do everything that they can to make the cars the same. Because the last thing they want to do is see, massive demand for a car that they can't make in any kind of numbers out of this new factory, as opposed to, well, we got ramped up over here in Fremont. Don't you want one of these? No. I heard that they got this new battery cell. Maybe I want that. So they have to be very careful about Osborning their products, right? So anyways, let's see here. What else did they talk about? Cybertruck, obviously, not a priority right now. Looks like it's a 2023 car. We kind of suspected that was going to be the case anyways. Lots of new tech. What do they mean by tech? Well, I mean, it's got the battery. The exoskeleton, how much of that is going to be complicated. They didn't talk about the Gigapress, because they do need a much larger Gigapress for the rear of the Cybertruck, because the whole back end of that car is actually supported for the bed. That's a Gigapress. No talk about that, so we'll see what happens with that. Let me see here. Let's check on the... Any other... Ian, you looks like you want to make an observation.
Well, yeah, I got a few. Going back on Cybertruck, what I found very interesting is the way Elon was talking when he was asked about the progress on the Cybertruck, and specifically, the volume and all these other considerations. And he was in this really strange sort of hesitate. I'm not quite sure how much to say here, but it was very clear.
Careful with his words.
Yeah, he was saying we're still not sure like what the value proposition is. In other words, we can make it infinitely desirable was the exact words, but then it won't be. No one will be able to afford it. That, to me, the fact that they're having a discussion between what's it going to sell for versus what's it actually going to have in terms of content means that it's certainly the level of equipment, if not aspects of the design, still aren't finalized, which is kind of amazing considering this thing's on the clock now and they're supposed to be cranking them out sometime in the next, starting in 12 months.
You can't be engineering this thing right up to the last minute, right? There's lead times.
Am I wrong? Isn't that kind of what it sounded like?
Yeah, and I think the other thing too that grabbed me was, are we on the cusp of Tesla committing another case of hubris here and giving us another Fabergé egg like the Model X? They've made lots of noise in the past about the Model X was super complicated and, we're never going to do that again. Are we seeing this all over again with the Cybertruck?
Yeah.
I'm worried.
I don't think they do. Oh, sorry, Eric. Go ahead.
No, please go ahead, Ian.
I don't think they'll go that crazy. I mean, there's a lot of really goofy, crazy stuff in Model X. You know that. You had one.
Not really. Just the Falcon wing doors. There's nothing else crazy about the Model X.
Okay, I suppose. It's overwhelmingly like, wow,
Yeah, but it's just the Falcon. You take the Falcon wing doors and what's the Model X? It's a Model S that's taller and bigger. It's a Model Y. It's the same thing.
The way they did the seats with the floor plan. I mean, that was pretty intricate,
but
with the subfloor and all
three
that.
different seat configs and I mean, not to interject here, but I think the thing we're seeing here is with the Cybertruck conversation, I look at it as having a few issues. Number one is we know that public conversation, the discourse around the vehicle, does have its ways of making it to Fremont and to now to Austin, and the guys are sort of listening in on what would the owners of these cars want. Like there's been some dialogue of how great would it be if you actually could lower the inside section so that you can actually get into the seats and put longer cargo in there and keep the back, closed. Like, so all these different things are happening, but also you're seeing what your competitors are putting out there and seeing some features that they might have and go, all right, well, it'd be great if ours have it as a feature too. So Ian's right in saying like you're treading on very dangerous ice if you're going to start looking at, well, what are they doing to see if we want to do that too, just to kind of remain competitive. But I feel like what drew Cybertruck owners into making those initial deposits, and who still may do that, is just it's different. It's just different, right? And Tesla's always been about just providing something that's different. Yes, we make cars, but our cars are different for a lot of different reasons. And we're like now with the Model Y and 3, we're stripping things away that are normally in your cars, but we're paring it down to the bare bones essentials, right? And so it's like when Apple took away the floppy disk drive, the 3.5, and people are like, what are you doing? And it's like, the more they keep taking things away, the more people are like, why? Because minimalism works from a technology perspective, right? And so I think the Cybertruck, they need to be very, very careful. Do not put all your eggs into one basket for this vehicle, which already is conspiratorial for some people, but it's definitely a conversation piece. But you don't want to overstep your boundaries and go, or now we're going to do X, Y, Z in the car. What you released a couple of years ago was already a jaw-dropping change of a car. You don't have to go above and beyond now because you think like, oh, we need to change something. If you believed what you demonstrated when it first rolled out is the car you want to produce, then produce that car. Other than, of course, the window's broken by a steel ball. But other than that, do that car.
I think there's an indication here with the Cybertruck that we're going to be looking at higher prices than originally anticipated. First of all,
which would not be surprising,
right? You can't make it at the price today that you anticipated because, I mean, look, costs went up anyways. Second of all, I mean, we just saw some very close-up pictures of the Cybertruck at the Gigafactory, by some workers, not some Tesla employees and stuff. And hey, it has an instrument cluster like the S and the X now. So, and the 17-inch screen. Now, does it have another screen in the back for the passengers? Who knows? But anyways, those are costs are involved right now. So there's some strategy involved here. With some overcomplication of the car, and you're making it, a little bit more complicated, and you're throwing some features at it now. So at what point? I mean, obviously, in the call when Elon said, "Well, we have to weigh things out because if we make it unaffordable, it's not going to be very attractive." Mm-hmm. The other thing too, you have to be very careful because you're entering a very crowded market, right? The big three car players been around for years. They make all the pickup trucks in the world. If you're going to get into this market, you have to be. You can't be just. You can't be, the Cybertruck can't just live on its own merits just because it's different looking, right? Because we know the looks are very polarized. Hold on. The looks are very polarizing.
For a year or two, but that'll be it.
Exactly. So the looks are very polarizing, but it has to be as good, if not better than everybody else. And now that we're seeing vehicles like the Lightning and the new Silverado that are coming out, and they have some very unique features on those cars. The Silverado has a pass-through in the back. Lots of people have been asking about that. They have larger frunks. So Tesla has to be very careful. They have to, it's one thing to announce a car, in 2019, and all of a sudden the competitors come out in 2022 and, of course, 2023, basically dropping at the same time now that your truck is coming out. And then people are looking at the two and going, well, the Tesla costs, $10,000 more for this package compared to this one, and it doesn't have these features. Are the looks enough to warrant that cost upgrade? Do the software updates warrant that cost upgrade? For some people, yes. Supercharger network, we know that works for Tesla's in Tesla's benefit. Mm-hmm. So, they have to be careful. Now, if Tesla's going to use this time to go back and tweak it to make it a little bit more compelling, and I think that the lead times would predicate things like doing like a complete redesign and adding we don't know how nimble Tesla can be. I mean, they can be, but when you have lead times, and Ian knows this, he's in the manufacturing business, you need a year. You can't be designing a part right up to the last minute and then throw it in production, right? Because you got to qualify these products. You got to get your suppliers lined up. They have to send you samples. You have to qualify those. They have to ramp up production. So there are lead times involved. I don't think people really understand how car manufacturing works in terms of parts. So anyways, lots of stuff to chew on. Anyway, so the bottom line here is we're looking at 2022 is basically a year. It's just like, okay, status quo. Let's just double down on what we can. Get through this chip shortage. Let's ramp up the 2 factories. Let's get this Model Y out because that's what's paying the bills at the end of the day. And then the other stuff will come in due time. So I didn't hear anything about the semi-truck. Again, that's not really consumer product, so it's more of a, a corporate thing.
It was weird. There wasn't even a single question about it.
Yeah.
Maybe that there's going to be deliveries at the end of the month. People are just like, okay, it started. So
well, Pepsi's supposed to get a few. They've been installing mega chargers not only at Pepsi but at the Gigafactory Nevada. We've seen pictures of those. So obviously they're getting the infrastructure ready. So at least between those 2 locations, that they can actually start running those trucks. And we've always said, and I've said this many times before, that the litmus test or the indicator semi-truck is coming is when they put these mega chargers in. So obviously those are coming. Because you can't put the cart before the horse, right? You need the infrastructure to be able to, support these cars. So, anyways, we've been going on here for quite a long time. I want to thank everybody for joining in on the chat. I'm sorry we didn't get more into the chat situation, but is there anything else we want to talk about very quickly before we can this thing?
I heard something that we talked about in a private discussion recently. Mm-hmm. He said level 4 by the end of the year.
Oh, God, please.
He said it. He said it.
Elon said a lot of things. When it comes to software, Elon is terrible.
I know. I don't put any more faith in it. I just thought it was funny because I hadn't really considered that, right? We're all talking about, okay, well, we're at level 2 and then it's going to go to level 5. He's always talking about level 5. And I just happened to throw that out there when we were having our little chat. And I said, I think the level 4 thing, which is basically full self-driving, but within a geo-fenced area.
Yeah.
Certainly highways and things might be possible. So I'll be very curious to see if that happens.
Level 4, probably get close. Level 5 is almost impossible. Level 5 means all the time.
Anywhere,
anytime, all the time.
Well, until they have self-washing cameras, it's never.
Well, exactly. So, level 5, as far as I'm concerned, is almost unattainable. I mean, maybe in a future lifetime or something like that. Maybe level 4. But anyways, I personally, I've lost a lot of faith. I've been burned on FSD. I don't see a use case for it for myself. I bought it, thinking that I would get into the dream. I've had 2 cars now. It's been 4 or 5 years. Haven't seen it. Even though in Canada we're supposed to have it within the next few weeks or months. But anyways, too late for me. And I have not bought it on the new Model Y. So plain autopilot is good enough for me. Oh, by the way, we should mention that very quickly. Obviously, in the question period, he shot down the whole FSD, tier level thing, which has always been something that I thought that Tesla should go back on. Give everybody regular autopilot, which is your traffic aware cruise control and your auto steer, and then sell a variant of EAP again. Give us all the features of FSD minus the self-driving on city streets. So that's auto park in the summon, all that fun stuff. Sell it for $4,000. I don't know, $5,000, whatever number. And then when FSD is ready, then you have a 3rd tier. But obviously, they're not interested in that. They want all their eggs in one basket. It's take it or leave it. Here's your FSD. You can spend $12,000 on it now, or you can subscribe to it for $200 a month. Take it or leave it. And I don't agree with that personally. It's nuts. I don't agree with it, but Tesla's Tesla, and they're going to do what they want to do.
Well, and I feel like, and this is just, all right, so editorial here. I'm a personal, on a personal thought, I think that FSD is, the way they're launching it and going about it and trying to push it and promote it is god-awful. Just my opinion.
I would agree with you.
But what I think is really, so here's what I would, if I were to whisper into Elon's ear, to your point, I would think, yes, you need to have tiered levels so that people can sort of piecemeal what they want. Because again, this is just software, right? The car is not going to perform differently if I pay for FSD or if I don't. It's just a matter of what can it do based on software limitations from what I'm paying for. So there's that. So aside from that, it'd be number 1, the costs are insane. If you want to, say, put a deposit, and the deposit gives you access to the beta program, to basically be like a supplier of data. I will go and drive my car. You, as an agreement, take the data I'm giving you, use that to improve the quality of the product. Then when the beta program is over, you can then offer, okay, do you want to actually then use it permanently? Then pay off X amount to actually then have it added to your car as a full-time feature, or say, hey, thanks for that, and then go on your merry way. To me, to charge all this money now for something that is not a realized product in its full-fledged expectations is insane. Even spending $200 a month is nuts. This is not an HOA payment, right? It's just software. Imagine if any other tech company, whether it's Microsoft or Motorola or Nokia or Apple or anyone, said, we're going to let you use our product, but we're kind of beta testing this new functionality of our camera. So if you want to take pictures with your phone, it's going to cost you $55 a month. People would say, you're insane. It doesn't make any sense. So ideally, like, I understand what they want to do, which is we want to use as many drivers as possible for data. But like, you're asking people to pay upwards of 5 figures to be beta testers. Beta testers. It's insane. So ideally, it's like, listen, I understand what you're trying to do. You're trying to, sort of pocket the money to pay the developers who are trying to build. Like, I get it. It's a cyclical thing, but the numbers are astronomically stupid, right? Yeah. And so to me, it's a turnoff. Like, I paid for EAP back when I had the chance to do that, and I know it's been sort of stripped away from that.
Yep.
And there is basic autopilot, but man, to me, EAP was the sweet spot. That's what it should be. It's either you get EAP or FSD, and that's it. Those should be the 2 options and be done with it. Yeah. But to $12,000 now for something that may not be ready for 5 years is nuts.
Yeah. It's not worth the ask, and if you ask anybody, I think most people would agree on that. However, I think, there's probably some psychology in here. If we price it like this, maybe you might go for the subscription instead. The problem is, obviously, is a subscription now is on a per-car basis, and it's non-transferable. So, but at least you can cancel the subscription if you don't agree with what they're doing, or maybe you don't find it useful. If you pay your $12,000 and you don't get it,
to flip your car often.
Well, exactly, and that was my.
But if you don't have the hardware either to fully support it down the road, you're going to pay now to have the computer replaced to get this. It's on many levels, it's crazy, and I know I'm kind of getting excited about it, but I just feel like a lot of Tesla owners are right to claim that they're being screwed over.
Yeah,
this to me is one of their greatest failures in trying to launch a product.
Yes, FSD has been screwed up right from the beginning, and I know there's a lot of people out there who are, Tesla absolute fanatics, and Tesla can do no wrong, and FSD is going to be amazing, and when you get to use it, you'll change your mind. The vast majority of people can't even use it right now because in the beta program, you got to be a good driver, and you got to, there's a lot of stuff going on. So, anyways, the bottom line is that I would agree with you on that. The FSD situation for as far as Tesla is concerned has been a botched product right from the beginning. I have no doubt that they will get to some kind of level that's actually quite impressive, but it's the use case of it that I have a hard time reconciling.
Yeah.
And anyways, that's why I decided I paid for it twice now. I've had 2 Teslas. I never got to use it. I don't see the use case. I've tried cars with normal autopilot, which is, the one that's included with every car. I'm perfectly happy with that. So I'm done. No more money for Tesla for autopilot from me. I'm done. Sorry.
Now, if you guys haven't
not
seen
even
the market,
on a subscription, not interested.
Yeah, if you haven't seen the market since it closed at $937.41, which is about a 2% increase for today, about $19. After the market closed, before the earning call started, you saw a plummet. Like
really?
It floored down to about under 900.
Wow.
It is now since rebounded, so it looks like an arrhythmia. It's now at 941 as of this moment. 941 and just before 7 o'clock. So
that's an aftermarket.
It's aftermarket. So we'll see what happens tomorrow when the market reopens again. But again, a lot of companies are reporting their numbers today.
Yeah. Did you check other tech stocks to see if they were all in sync? Because the tech stocks have really been hammered this week.
You know what? Here's what I will tell you. Let me quickly, just while we're here.
And I know we're going long, folks. We want to get out of here as soon as
I will mention something while you looked that up, Eric, which was really interesting. Was as soon as the financials started to come in, it climbed and it was going past 960. And as soon as he announced no $25,000 car, whomp, It dropped down to about
well, we kind of we had an inkling that
I watched that happen in real time. It took about 5-10 minutes, and whoop, and now it's climbed back up to about 940.
Apple dropped a bit. Microsoft is up. Alphabet is up. Tesla is up. Close of day. Nvidia is up. Intel is up slightly, but a lot of the other ones like EA, Activision, Blizzard, Salesforce, Alibaba, many others are down for today. Not done. Amazon's down. Ready? So Amazon dropped $22.27 per share. It's less than 1 percentage point.
Wow.
So that's crazy.
Well, the bottom line is Tesla is growing up. They're starting to suffer growing pains all over again, but in a different kind of growing pain. So.
Well, I mean, and I think for all the shortcomings that they talked about on the call for today, and I know I missed part of it, but for all the shortcomings that have been reported, for things they're saying, like, look, in the midst of a pandemic still, there was a lot of good numbers that came out. We know the year-over-year figures are still up from this time last year to now. And again, and now we're in year 3 of an ongoing pandemic. So they're holding well in an economy that a lot of companies have not. And they're selling, not like Q-tips and stuff. They're selling actually cars and other expensive tech. So there's a lot of good things to take away from this. I know we're going to analyze this for probably weeks to come, and I'm glad that we're going to have those conversations. But I think the main takeaway is there's good things coming down the pipeline. It's just going to take a little bit longer to get there, but that's because that's what we're in now. This is just where we are in the world, and until those things are remedied, which is all out of their control, ideally, then it's we're going to see another year or two of this, and then after that we'll reassess and see where
very, very exciting. Still lots of really cool products coming and all kinds of services. We just got to be a little bit more patient,
And I mean, let's not overlook, for so long this company was like, months away from bankruptcy, and now it's doing spectacularly well.
I know.
Like it's really amazing financial health. Better than any other OEM on earth, I would think at this.
I mean, they're selling every car they make, and everybody else is cutting back production and stuff. So they've been able to weather this whole thing. It's just that they have their own internal growing stuff that they have to do, we just got to be a bit more patient. So still excited, lots of cool products coming, and hopefully we'll next year will be a little bit more interesting. Maybe towards the end of this year, they might be able to give us a little bit more info as to what's coming on, but. Anyways, I think we've been going on quite long now. Oh my gosh, almost 2 hours.
Oh, and by the way, 2 things really quick. Number 1, happy birthday, Teslatino Raphael. If you're out there,
our friend
Teslatino, if you're listening,
yes.
happy birthday to you, good sir. And if guys do not know, 3 at Last is no longer in the Tesla family, or I should say, it's not in the Trevor family.
Yeah.
That the car has now been given to a new owner. Which congratulations to that owner. We hope you are enjoying
wonderful
the vehicle
people.
And spreading the excitement and energy to others who are interested in getting this.
Yeah. So what Eric is talking about is I sold my Model 3, and yes, well, it happens. Listen, Ian knows me well. I don't keep cars for very long. I'm just one of those.
He's a tinkerer. He's got to fiddle. He's got to change. He's always looking for the next thing.
I wanted to make sure my car went to some new owners that were going to take good care of it. I love the car. And I found the right person, and I spent a lot of time with them and explaining things and stuff. So I know it's gone to a good forever home. So I'm very happy about that.
And they got the yoke, which is really great.
Yeah, I wasn't going to sell the yoke with the car, but it's just like it's one of those things, and they liked it so much. Matter of fact, Bev liked the yoke so much she made me order one for the Model Y.
There you go.
And you know what? Honestly, I was going to buy one anyways, but she actually asked me, "You're going to buy one, right? I like it." So, yeah. So, anyways, I have a delivery date between May and June. Who knows? I don't expect that to hold. It's going to change. So, anyways, at this point, it's like okay, but good news. I mean, 4680s, and if I get lucky and the VIN number shows Texas, I'm all set. All right, boys. I think we should sign off because I can smell dinner. And I have to book out of here. So anyways, thanks everybody for joining us on this podcast. I know it's a little long, but these kind of things, consume a lot of time. And I know we had some technical difficulties at first. I know for you guys in the stream, if you listen to the audio, it's fine. On our end, we listened to a different stream, and it was cutting out on us. So anyways, apologize for that early stuff. But anyways, we got to sort it out. Lots more to talk about, and watch the markets and stuff. And we'll have more to say in the coming weeks. that's it for this show, and we'll see you guys next time. Thanks for watching and listening. We'll see you next time, guys. Bye.